Welcome to the Chicago Home Partner Podcast. I am your host, Amanda McMillan. Join us each episode as I have experts in all of the different fields of Chicago real estate as we unpack and digest what's actually happening out there.
Okay, we are back, episode 21. We are into officially our 20s. I am back here with Brooke, which I'm very excited to be back with her. Welcome back. You're a professional at this podcast thing.
Round two. Can't wait. Let's do this. I love this.
She's as excited as I am. I know it. She just shows it on the inside. I show it on the outside. We are going to dive in. We've got a lot of great topics today. We've got a great guest coming in afterwards. Dan Gjeldum is going to come back and share a little bit more of his insight on what the heck is happening in mortgages. I want to rip the Band-Aid off, jump right in. We talked about it a little bit last time we had. Todd Carpenter was here as a past employee of the National Association of Realtors. So we really want to talk about this.
One of the things he said that I thought was so interesting when we were talking about all the changes with NAR and agents was that Chicago agents are the hardest working agents he has seen nationally, really.
I agree.
Love that.
Can we just end the conversation at that?
Wish we could.
No, it's true. And I think
why do you think that is?
I think there's such a misconception from consumers on what we do.
Yeah.
And I think, I'm going to put it out there, I think some of it is rightfully earned misconception because I do think that there's a lot of people in our industry that are, I call them, and I mean no disrespect because I was in this previous industry before, but I call them the waitresses of the real estate world. Like I said, no disrespect. I slung a lot of drinks. I bartended. I waitressed all the way through high school and college. I know that those are really some of the hardest working people. But what I mean by that is that there are a lot of people in our industry that are just order takers.
Yes.
Show me this property, do this for me, figure this out, so on and so forth. And I think that's the reputation that we end up getting. The reality is especially when talking about buyer representation, I mean, the reality is it feels like our brains are probably going for a good 20 hours a day on the different things that we're doing to put our clients in the best positions possible. Now, this can start 3, 6, 12, 24 months in advance of any closing.
Yeah.
Right?
Yeah.
I know you are just the same way as me. We're going to jump on a Zoom, grab a cup of coffee, have a phone call. We are going to have an initial consultation to fully go through what they want to accomplish, what's going on in the market. Are we a good fit?
100%. I love the part about are we a good fit? Everyone thinks like, oh, we'll work with anybody. I can tell you that it's not true. I will not work with anybody. You will not work with anybody.
No, it's absolutely, we're fortunate to work with some of the best people in Chicago, hands down, but it's about making sure that it's a fit. And I tell everybody that sits down with me, if I'm not the right fit for you, please make sure you find it.
And why is that important? It's important because one toxic client can take away from all your other clients who have needs too, and that's not fair. And so I think we are very protective of making sure.
Great word choice.
Yeah, of making sure that our community of clients are, they respect us, they understand what we do, and they're not going to be abusive of our time.
And I think the other side of that is from a client's perspective. Buying a home is a very intimate, personalized journey, at least the way that we do it.
It's a short-term marriage.
I'd prefer say dating for a short term. I don't like the divorce word. But
there's amicable divorces though, I always say then we're
still expensive.
We're divorced friends afterwards.
But it's an intimate process. And if for some reason somebody else doesn't feel that they can be intimate on that level of sharing and understanding with me, it's got to work both ways. And I'm very, very transparent about it. But our job in this, our advice and our counsel is starting way in advance of when it is.
Yes.
That's when we start to put together. We talk so much about the strategy, the timeline, the playbook, who's going to be a part of our ultimate team as we figure out what this looks like. I have a client that's going to close next week. It is 2024. My first consultation with her was in March of 2020.
Wow.
So not every journey is the same.
No, it's
right?
not.
And so it's to have that introduction, that's when the job starts. Because I tell you, between 2020 and 2024, I didn't stop thinking about how I was going to help her to get successful at some point. Maybe I should have. Maybe I should have taken it personally. No. But it's one of those things that's kind of where it starts, and putting together the the plan of how to get successful. Now, so much of what we do in that depends on making sure that we're aligning them with the right players as well.
Takes a good team.
That we're understanding the market and understanding their goals so that if we understand what they're trying to accomplish, we can give good advice.
Yes.
And this is even before we've even talked about going and seeing a property, right? That's when it starts to even, that's where everyone thinks that it starts to get interesting. We've already got hours and hours and weeks and sometimes years invested into what we're doing. The property part of it, as I like to say, that's kind of let's figure out what's actually going to make sense to you.
Right.
And that for some people can take a week.
Could take 4 years.
For some people could take 4 years.
4 years and 2 kids for some people.
I'm doing the math. Yes, I could. But it's one of those things that throughout that time, we are supporting those people, right? I have clients that I know are not going to buy in the next 6 months. But that doesn't mean my lack of support doesn't stop for them because they're not on the ticker tape,
right?
From that perspective. So it's constant advice and counsel and checking in and saying, hey, here's what's happening in the market. What's happening in your life? How do we structure to the next piece? It's when you actually get to that active role that then, the dynamic just changed a little bit more. Not only are we doing things as basic as scheduling appointments, navigating schedules, working with other agents, working with home sellers, trying to figure out how to even get our clients educated. Getting a client educated, I always tell people when we first start going out, we're window shopping. We're not out to buy. We're going to take this time. We're going to educate you. We're going to understand what your dollars can do. We're going to understand what the market can actually help you to accomplish.
Educating them on construction. That's a big thing. Home ownership for most people is a new experience, and they don't understand what's the longevity of a roof, a furnace, all of those items, which are so important and really impact your bottom line.
For certain.
So to me, that's one of the most
exactly
important.
The education piece, and this is right where you and I see so eye to eye on it, is huge. Because many people, even if they're current homeowners, a lot of them never had the education, or if they did, they forgot about it.
Yeah.
So understanding the different materials, the different pieces, understanding new conversions versus new conversions, new construction, resales, what it means to buy from a developer, what it means to buy from an estate, what it means to buy in all these different circumstances. And these type of conversations are before we even start to navigate things like the interest rate market that we're in, the competitive situation, how does the election impact things, what is my buying experience going to look like? All of these different aspects have conversations.
So many moving pieces.
From that. And I think that people get very stuck in the minutia of what we do. Well, I can schedule an appointment for myself.
The Vanna White version of what we do.
Totally. Yes, absolutely.
Yes.
No, but I think I actually saw it, with all of the discussion on the lawsuit, that there was a couple of agents that actually took the time, and this would be a great exercise, to write down all the different things they did throughout the day for their clients. And I think they came up with a list of 800 things.
Wow.
Just going through every different aspect. Because even before we show a property, what are we going to check into? We want to have a good understanding of how healthy is that condo association?
Yeah.
How old are the parts of that house? What is my client? If I know a client is maxing to get to a certain price point, but I know a house is going to need a ton of construction, I'm going to advise them before we go in and really say, oh my God, this is great, but it's not obtainable. Trying to understand and stay experts with regards to what's happening in the lending world so we can advise different strategies for our clients to become once again successful.
And also to be the mediator of the negotiation. People don't like to have tough, uncomfortable conversations. It's, I use the example of an overpriced property, and I always have sellers that'll say, oh, the price is negotiable. But if it's overpriced, people don't want to offend other people. It's uncomfortable. They'll just wait till you get to a realistic point. And so the same thing happens with inspection. No one wants to hurt people's feelings, and they don't know how to navigate that. And that's where our expertise comes into play.
And that's the thing. We've talked here now for 5 minutes on the topic, and we haven't even gotten to a point where we've made an offer in what we're doing, right? We're still window shopping, but there's so many different aspects. And I think that's the important thing to note. I always kind of joke, as I've talked with my sister a lot, and she's in the hospitality industry. And I always kind of joke with her, and I said, when she locks the door at the end of the night, she can put it out of her brain. And I see that as a huge luxury, because anyone that knows me knows that this brain just goes and goes and goes and goes. Luckily, I don't sleep a lot, but it does. And the reality is that it's a 24-hour process of what we're doing. We all have to work really hard to kind of give ourselves our piece in it, because it is something that we're constantly trying to how to navigate different markets and really make our clients successful. But I think that it's important to understand, whether it's negotiations, whether it's inspections, or dissecting what things mean. What are big issues and what are solvable issues? What should we press on with? What should we say, whoa, we're out of here with? Who are the attorney recommendations? How to navigate? Like there's so many different aspects of what we like to think we bring in terms of the value to our clients. And I appreciate the fact that we can talk about that a little bit more here.
Yes.
So in our ever-going, fun-filled market of multiple bids, insert sarcasm here. I think it's really important for us to come back and talk about some of the things that we're doing really successfully for our buyers. Because the truth is, it is a very scary time to be a buyer. It's a very intense time to be a buyer. But I know that we're also crushing it in a lot of our multiple bids, not always by price. And I want to talk a little bit about what you think are some of the strategies that you're using to be successful.
So it really kind of also depends deal to deal. And, what is the seller looking for and navigating some creative ideas around that. Most recently my buyers made an offer on a place, multiple offer, and price is obviously always going to be important to a seller. But looking outside of that, they have 3 kids, they're pregnant with their 4th, and they really need to be in the house through the end of June. And so we allowed them to stay there for free. And that was just a little bit of edge for the sellers that made them pick our offer over someone else's. It really wasn't just about price.
Yeah, no, and that's a great topic. One of the first things that I think both you and I do is we engage with the listing agent and we say, what's important to your client? Because, right?
Yes.
You want to hit the dates. You want to do, I know you had mentioned kind of that free rent back. So to explain that to people, what are you doing in that? You're closing a little bit earlier.
We're closing a little bit earlier because they want to make sure they secure their interest rate. And then we're giving the sellers the security of knowing the deal closed, the money's in their pocket. So closing in May and letting them stay for 30 days without having to pay any rent.
So free rent.
Which has value. So we're not putting it in the mortgage. We're not paying interest on it to the end lender. So we're giving more money to the sellers without it costing my clients more money.
Yeah, and especially in a market like this where a lot of our sellers want to know that security that they can go purchase. That gives them, it's kind of a win-win. They get a little bit of free rent. Everybody likes free rent, but they also have the security to know that they can go purchase something without the concern that something's going to go wrong here. So I think connecting with the agent right off the bat and finding out what is most important is huge. Obviously, price. We've seen a little bit of what we used to use in terms of the escalation clauses where we were talking about using, offering a bit above another offer. I think those have gotten a little bit of a bad reputation in our market.
Yeah, they have.
Sellers,
they can be great or they could really work against you.
If you're going to do it, it has to be a substantial enough change. I tell every agent that is coming back to me, my client isn't going to accept one offer or another over $1,000 to $2,000. They're just not, right? They're going to take the best terms. And some sellers just really feel a little offended that if you say, well, I technically would pay that much, but not under these circumstances, sometimes it rubs them the wrong way.
And the other side, I saw this on a deal, was everyone's starting number was very similar. So that means no one would get to the higher number because it wasn't taking it there.
Yeah.
And then the seller's upset. And then the agent's asking for now all new offers from everybody without that. And now the buyers are upset. So it's a very tarnished transaction now.
For certain.
Yeah.
One of the other things, we just actually used this the other day, and we won a multiple bid with a confirmed lower price. Our price was 2% lower than the highest price. But what we did was we used some fancy financing. It was a vacant property. The other offer wanted 45 days to close. We offered them an 18-day close, and they said, you know what? We want to be done. So using timelines, using rent backs. Obviously, we see a lot where we talk about taking something in as-is condition, which what that means is we can inspect.
Yes.
But we're technically not going to ask for anything. Although I have that little caveat, if there's something really egregious that comes up, it's probably a discussion to be had.
And I've started writing that into my offers and letting the agents know, because I don't want them to think, oh, my client's going to take on a new roof when you told us the roof's only 5 years old. Or we're inspecting sewer lines. Who has any idea what that looks like, you know?
No, for sure.
And so I just think it sets the tone of like, we're not going to ask for a leaky pipe or really nitpicky things.
One of the other things that I actually saw, I had 24-hour offers on one of my listings recently. And one of the things that I'm always learning, absorbing, and taking on that I thought was pretty clever was the fact that an agent, rather than just increasing the price, they offered a closing cost credit to the sellers. so that they said that they were going to pay a portion of the closing cost credits, which is kind of nice in that sense because it doesn't increase the price, it doesn't increase the tax basis, doesn't increase some of the costs that are related to the price, transfer taxes and those types of things. Mortgage interest from that. And so it was just kind of an interesting thing that I saw in terms of that.
I think that's great. If you have extra cash, most buyers have to finance that increase, but if you don't have to, it's way smarter to do it that way.
For certain. And I know we've got Dan back later today. Dan's going to add in a couple of things that we can do from a mortgage world as well. So definitely some interesting things in that.
So along the lines of talking about buyers, let's flip it to sellers. Buyers are writing sellers lots of amazing offers right now in most price segments. How are you advising your sellers right now? I mean, pricing is so difficult. What's happening in rearview mirror isn't a reality of what people are paying today. How are you helping that anxiety of, are we listing for the right price and not overpricing?
So I've always said, since I've gotten into this industry, that valuing residential real estate is the bane of my existence. Yeah. Anybody that has worked with me and talked about pricing has heard me probably say that verbatim. My brain works in a very exact space. Systems, equations, I have this beautiful little box that I try and put everything in. It's how my brain works. And yet I work in a field which the product, not to diminish a home, but the product, the valuation of it exists in a very gray area.
Very gray.
Now, it helped me when I understood why. Why do residential homes have to live in a gray area of valuation? It's us, human element, right? We muck up every system, every equation, everything. Now, our philosophy is always just look at more data and we can at least get ourselves better and closer. So every seller that we sit down with, we talk about the range of what the market value is. Now, what makes it incredibly complicated right now is that there is the range of what things are worth, and then there's what things will sell with. And the reality is even though right now is very competitive, this is always part of the conversation. We have certain markets where the home should sell exactly in the range.
Yes.
We have certain markets where the home might sell below the range. And then we have certain markets like what we're in for a lot of people today where it might sell above it. Now, I'm always a big proponent of when I look at comparable properties, I don't fully focus on the closed properties. They are great at telling us the story of something that happened before. But for me to look at the under contracts and the actives, that tells me a little bit more of what's happening. But the reality is we're in a market that, as I said, some people may exceed those valuations. Now, in my experience, it's next to impossible to underprice a property in this type of market.
I would agree.
Right? So I always say, if we're going to err in a market like this, err on the low side, because it is also very easy to overprice. And if you overprice it, you're not going to sell for what you're worth. But if you hit it on the mark or if you slightly underprice it, your ability to exceed your valuation is high. So typically I will look to really find that range. But the other thing that I'm really aware of is where our buyers search. If I tell one of my clients that I think that the home is worth somewhere between 600 and 610, and my strong advice is typically going to be to list around 600.
Right.
Because the reality is that you're opening your eyes to way more markets and your ability to maybe get competitive and exceed that 610 number is really high.
You killed it, Amanda. We can leave it at that.
Awesome. I'm a little tired of talking about this really intense market.
Let's lighten it up.
I'm really excited about this topic. Now, first and foremost, we are both dog mamas.
Yes.
And I just got a puppy. Which I probably shouldn't because now we have 3 dogs and that is absolutely insane. But
I disagree. It's not insane.
It's just a little cuckoo. Anyways, what I wanted to talk about, a lot of our clients have dogs and or pets.
Yeah.
And what should our clients be thinking about when they're considering their next move with regards to the pets?
I mean, I think they have to look at their lifestyle and how often are they home? Is having access to a yard or a park or a dog park important? Is living in a neighborhood where you have access to WAG or rover walkers readily available important? I think most of my clients right now who have a dog or want to get a dog, like having some sort of yard space. Most of them are looking to go into a single family. And you'd be surprised, a lot of these houses don't have great yards.
Yes.
So, and that's at every price point. You think, oh, well, once I get to 2, 3, 4 million, I'm going to have such a great price point. I have a client at 4 million, and it took a while to find a house with a great yard because they build them so big. So, it's kind of finding that sweet spot. Sometimes these older homes that have been renovated have great yards because they didn't over maximize the square footage of
For certain. And I think along that thought process is you have to think about your pet. What kind of dog is it? How much activity do they need? I also think that there's some really neat tricks and trends that we're seeing lately. I'm seeing a couple more dog baths as we get out there, which I think is a great thing. Now, personally, 2 of our 3 dogs are very anti-bath, so I don't really foresee that ever going. We also have short-haired dogs, so we don't have to worry quite as much about that. But I think that, dog baths are something that I'm seeing a lot. I also I don't know if you've been seeing some of those feeding centers for the dogs, right? You have a little water spigot down there, so there's no more sloshing the water balls around.
Artificial turf. People are getting away from grass. I'm going to be one of them.
So on that topic, I think I have sold more turf for the company.
Rug Zoom. Yes, love
Rug
them.
Zoom. Rhett is the owner. But we put our turf in probably, I'm going to totally botch it now, 12, 15 years ago. It was one of those things that every year we were redoing the sod and the dogs would tear it up, right? We have dogs that spin and run, and we
Mud
put it in.
everywhere.
It's a little bit of money, but man, dogs, kids, everything. I've gotten more clients too. We have a city with bad soil and not a lot of outdoor space. Maximize it. Yeah. So I think that's a great point.
That's the best thing you could ever do.
For certain.
I talked a client into it. She's like, really? No sod? I said, you'll call me in 3 years when you've replaced it every year and be like, I should have done turf. Lesson learned here.
Hands down, it was one of the best investments we made in our dog lifestyle.
Yeah.
For certain.
I've also seen a ton of people putting in these cute little cat doors for their cats, which I think is great to kind of hide the litter box, kind of keep that out of sight, out of mind.
For certain.
People are just doing people are really adapting. It used to be everyone had to pick their house over their dining room table. Do you remember that?
Yeah.
And that's still appropriately true, but everyone is very into their pets.
Yeah.
I think we're a very
part of that is a little
pet-friendly
bit
city.
of a product of COVID, right?
COVID,
I think I heard that pet sales and pet adoptions soared through the roof.
Yes.
The other thing that I've seen more for cat or small dogs is some of those window attachments.
Yes.
Where the places they have the little kitty hotel where they can kind of
Super
sit
cute.
and hang out. If my dogs tried to smush their 80-pound bodies in there, we'd have major issues. But I think that you're right. I think you need to understand there are certain things that can make your life easier with your dog, but I do think it takes some thought process. We haven't even talked too much about senior dogs, right?
Yeah.
Understanding that as dogs age, that sometimes certain homes are going to be a little bit more challenging for them and think about what's easier. I mean, the reality is they're our family.
I've had people go into high-rise buildings where there's elevators, dog runs. It's easier for them. It's easier on the dog. Yeah, I mean, there's just a plethora of options.
Yeah, and I think the other thing that's great about that is, and you mentioned it a little bit in the beginning, is that there has been this, breakout of new pet facilities in the city too.
Yes.
Right? So that the dogs just aren't home wreaking havoc during the day.
They can go swimming.
Right.
They're living better lives than us. Amanda, we did this wrong. Coming back in a pet in my neck life.
I would like to come back as one of my animals.
Yes, one of my animals. Yes, totally. Yes. Awesome. I agree.
Well,
on that note, everyone, you should go adopt a pet. There's lots available for adoption.
Well, Brooke, thanks for coming back.
Thank you.
Okay, how excited am I to have my favorite person in the entire lending world back with us today, Dan Gjeldum, Guaranteed Rate. Thank you so much for being here.
Thanks for having me again. It's a pleasure to be here.
It is always such a pleasure. Most of you probably don't know that Dan and I honestly probably speak at least once a day, if not 2, 3, or 4 times a day.
Absolutely.
So I'm privileged enough to hear what's going on in the world of mortgages, interest rates, and all of that craziness, as well as the personal successes of his family life on a regular basis. But wanted to bring you back in. People love getting the insight from you and really just want to continue sharing on a higher level so that people can understand as we navigate this very challenging roller coaster of a year, kind of what we're seeing, what we're doing, and what it all means to us. So I'm going to dive right in. I cannot believe that we're as far into this year as we were. We're really starting to see all the good data come out from Q1 2024. In your opinion, give me a little bit of a snapshot of how did Q1 2024 compare to Q1 2023?
2024 is definitely, there's more certainty, right, with what's going on with rates. In a way, people know they're going to go down.
Because
right?
I some days feel clueless.
No, trust me, 2 days ago, totally clueless. But people have a sense of where things are going and they're more and more comfortable. Every day that goes by, people are more and more comfortable with where rates are, right? So people are out looking. I think you can attest, showings have twice as many or 3 times as many people. The number of multiple offer situations are insane, right? People are paying a lot of markets around the country. People are paying over market still. So it's a lot busier. And I think it's just the whole mindset is more accepting of everything that's going on.
Well, and I think, tell me if you think I'm wrong. At the end of last year, end of 2023, fall and winter, we saw a lot of ugly rates. We saw things starting with 8s.
Absolutely.
So now that we're inching down, we're closer to 7%. We're seeing some things that actually start with a 6. Like, I think people forget what a win that feels like.
Yeah, for sure. And back when they were touching 8, right, then it was people were saying, well, they're going to get to 7, so we can always refi at that point. But yeah, the numbers starting with 7s are great. As you mentioned, we're seeing 6s. And there was a point where we saw really like mid to low 6s for first-time homebuyer programs, things like that. FHA, VA loans, all of that stuff. FHA and VA typically have lower interest rates than conventional financing anyways. So when we see 6s, it's kind of all right, we're at, let's just say 675. It's like, all right, buyers are, all right, hurry up and go. Let's go find something, right? So they can jump in.
Now, I know you guys measure a lot of your traffic through the pre-approvals you're doing. Would you say pre-approvals this year, Q1, are up or down compared to the last?
That's a tough question because and it's hard for me to, like, pre-approvals last year, some of them just disappeared, right? They didn't buy, and I'll get emails now and it's like, oh my God, I totally forgot about you because we had one client go contract this week.
We don't forget about anybody. It just goes to a darker place in the brain that needs to get revamped.
Yes. Great point. So I was reminded of a client that we originally spoke to in 2022, more than 2 years ago, that finally are now under contract for a new house. So, it's definitely busier. I mean, my March was twice as good, if not 3 times as good as last year's March in terms of closed loans and new applications and stuff. So we're moving in the right direction. It's really fun again, because it really, a year ago, 16, 18 months ago, it wasn't that fun because it was so stressful with the uncertainty that now it's getting to be fun again and people are excited.
It's definitely easier to advise and counsel on it. There's still a lot of unknowns. I'm not going to share the sentiment of fun with Dan because on our realm of it, there's still a lot of headwind, which isn't as fun for us. But I get what you're saying is it's nice to be able to advise, counsel, and have a more clear idea of what we think is going to happen. Would you say that, and I know this is a loaded question, do you think that rates have performed as expected so far this year? And on the same token, have any of your longer term thoughts and projections changed?
They have not performed as people thought. At the start of the year, they were predicting 6 Fed rate cuts. It's gotten progressively lower. Just last, there was three cuts were coming. Now we're at 2 cuts coming. The timing of the cuts are totally different. They thought we'd see cuts in potentially May. Back in December, they thought maybe May would be the first, and then very quickly after that, May's out the window, June's out the window, July's out the window. Now they're thinking 2 cuts starting in September. And at the September timeline, there's only 3 meetings. It's September, November, December. So they're thinking 2 cuts in that window right now. There's people out there who think there's going to be no cuts, right? So the data that's been coming out inflation-wise is extremely confusing because when you dive into the numbers, there's certain pieces of it that skew it higher, and there's pieces that skew it lower.
No, it's quite the mess. It's quite the roller coaster. That's why we appreciate having you to digest that a little bit better for us. What challenges are you really seeing on the lending side of things for our buyers in this market?
I am still floored that buyers aren't pre-approved out looking for homes. I don't know how the agents with whom they're working are allowing them to not be pre-approved. I don't understand how they think they can submit offers without being pre-approved. So that's always it's always surprised me anyways. I'm not even going to acknowledge that.
That's not happening. I don't believe it. It's like taking diabetic kids into a candy store.
Yes.
I mean, until you really know what you can and can't do, it makes absolutely no sense. And it's not a good use of anybody's time, energy, and the level of expectation that you're setting for that prospective buyer.
Yeah. And it's really, it's hard for us when we have those initial conversations with people who have started looking or have started looking online at homes, because a lot of times I have to be the bearer of bad news, especially like in a condo situation. When we start talking, like they haven't figured in the HOA to their budget and what their expected payment's going to be. So a lot of times it's difficult conversations to have with them. And I really wish people would have those conversations earlier I'm happy to do those conversations whenever,
Sure.
But knowing those kinds of things it truly makes everyone, and as an agent, your job easier, our job easier, right? And those things, it still boggles me that people aren't.
Well, and I agree with you. It's one of those things that, I mean, heck, you know it better than most. I send certain people to you that are probably 8 to 12 months out just to say, let's lay the groundwork. Let's take a look behind the curtain and let's let an expert say, if you really want to put yourself in the absolute best position possible, here are a few things that we can do to really put you in the greatest position. That's me advising for the betterment of the client. That's you advising for the betterment of the client. And the fact that people would stop that part of the process, it's beyond me. One of the things that I've noticed, and maybe you can kind of talk on this year, which has been quite interesting to me, is I feel like in general, we're seeing a lot of larger down payments. I mean, I felt like, especially in the condo realm, and once again, Dan can get loans done at all different down payment levels.
Yep.
But I do feel like we're writing a lot more contracts that are 20 to 25% than 5 to 10. Would you say you've seen some of that as well?
Yeah, for sure. And I think that speaks to the uncertainty that's been building up for a few years, right? There's people that, a lot of people, what's your lease situation like for the first time buyers? And they're like, well, we're on month to month. Well, it's kind of like, well, when did you go on that month to month? Was it 2 years ago?
2 years ago.
Right? And they just have great landlords that don't want to lose a tenant.
Yeah.
And I think that's more often the case, because people will say, I'm 8 to 12 months away from looking to purchase. But if they fit our first time home buyer programs, if they fit like things like that, you can attest they're all of a sudden like, holy cow, I can buy a place. And then they buy a place in 30 or 60 days.
Yeah. Okay. So as we know, not all, but a lot of our markets are uber competitive right now. We're dealing with a lot of multiple bids. Some of them are marginally heated and some of them are excessively so. What are the strategies that you're seeing and recommending for your clients to implement to try and put them in better positions?
So one of the things we use, our trade name for it is the power bid, right? We can get someone, bring them in and do a full credit underwrite as if they were under contract to purchase. We set a top end purchase price, what their down payment's going to be. And instead of a pre-approval, we're delivering a full mortgage commitment. Right?
Okay, I want to break this down for people because we need to talk in normal people talk. Prior to the power bid, you needed a property to submit a full application and get a full approval. Guaranteed Rate came forth with this idea of the power bid to be able to do that without a property, do a full application, get a full approval. So in theory, you're either submitting a contingency that's a lot more powerful, or we have some clients that are a little bit more into the risk of writing a cash offer subject to mortgage.
Yep.
Which once again just puts them in a better position versus the however many other offers they're doing.
To the power bid side, when we talk about how to make your bid more appealing to a seller, the power bid is going to come with the standard conditions are appraisal, title, and insurance. A lot of buyers are waiving appraisals, right? They're going to get one, but they don't care what it says, essentially. So if we can deliver title and insurance only, that's huge, because that's really right behind. I mean, that loan can close. Technically, it can close as fast as 8 days per the TRID rules that are established. And those are, long story short, mortgage rules that prevent people from closing too quickly so they don't somehow get taken advantage of in those 8 days. It allows them to close as quickly as possible, which could be great for a seller, especially if the seller needs to buy, if they have something else under contract.
So Dan personally saved one of my deals the other day. We were in a multiple bid. The property was vacant. We didn't have the highest offer. We didn't. But what we did have was we had, first and foremost, a great real estate team. And we were able to offer them an 18-day closing, which nobody else was able to touch. And that had value for the seller because it put them in the position that they wanted to do, and they didn't want to have the property anymore.
It's all about how we structure the deals for the buyers.
So realistically, we're going to put it out there. What is the shortest mortgage you have done in the last 12 months?
8 days.
That gives me anxiety.
Oh, it's not. Yeah, and those were people.
I'm going to stick to 14 to 18.
Yeah, 10 is a great number, right? 10's a round number. 15's a great number.
My blood pressure is rising
but the 8-day ones, if the buyer's not ready to do that, it's a fire drill, and we'll do fire drills all day, right? But yeah, 8 days.
Whew. Yeah, that just, like I said, my blood pressure just went up thinking about it. We do it. We've done it. It's a big team effort. This is something that you and I were just talking about because I think there's been more discussion on this lately than I've heard in years. What does it mean for somebody to buy points in their mortgage? And is this something that you're seeing more of now? Because I feel like we are.
That takes us back to when rates were at 8%, let's say.
Okay.
Points were never, I've been doing this since 1997.
Yeah, let's start. What is a point?
1 point is 1% of the loan amount.
And what do we do with the point?
So typically,
that's
it's
like
used,
the Facebook
yes,
and
exactly.
the Instagram.
Yes. So the point.
I just aged myself by like 3 decades.
I picked up on it though because I'm old too. Older. Sorry. You're right.
Ooh, this is getting real heated around here, people.
So 1 point is 1% of the loan amount. And the typical purpose for that historically was to make your rate lower.
Okay.
But when rates went up, we had to charge points to actually get pricing on loans. Like there was a set top rate that we could find in the market, and you had to pay to get it. Wow. So that's when points went into play. The purpose of points now, that the way people are using it, is to make the rate lower, right? So, but the problem with points in a projected downward rate environment is that paying 1 point for the most part is a 2-year break even. Okay. And what I mean by that is the cost of that point compared to the payment difference that you'd get between the 0 point and the 1 point rate, the amount of months that point takes to be made up. So if we're thinking we're going to refi in 12 to 18 months, but the upfront cost of that point is a 24-month timeline, it's not worth doing.
Sure.
Right. And the fact of the matter is that you pay more, you get higher interest deduction for a higher interest rate. So, there's that 24 months is kind of moved to 26, 27.
Okay. No, that's very, very helpful because you and I talked a lot about it. We used to see people buy down points when the interest rates were very low, right? If they were low and we didn't expect them to go lower and you were buying into a house that you were planning on being for a longer time, then it made sense.
Yep.
But then when they hit their premium and we, last year when we were telling everybody you're going to refinance this loan at some point, then it didn't make as much sense. But as you're explaining, there was certain pricing that wasn't even available without it.
Right. Absolutely.
Okay, that's helpful because I know it's a little bit of a cloudy topic. And just so we're clear, that is different than a seller buy down in terms of buying down the rates. We're not going to go down that rabbit hole right now, but that is a different type of rate buy down. Here's another great question, right? We have people that we're finally getting a little bit more inventory. They're finally going under contract. And there's all this media about, are rates going to go down? Are rates going to go up? Well, if they go down, do I want to lock in right now? In your opinion, somebody goes under contract today, our advice typically is going to be with them, go ahead and lock in ASAP.
Yep.
Now, as a consumer, I'm thinking, well, what if rates go down in the next 2 weeks? Wouldn't I be in a better position to wait for that to happen to lock in? Can you speak a little bit to that? Because I think people are always a little confused when the media says rates might be getting better and our advice is to lock in quickly.
Yeah. So number one, the media, and I don't speak badly about this, but the media goes off data that is old. So all of the reports, they'll cite Freddie Mac's interest rate reports. Those are always a week old. Right? They're not going and saying, what's the rate right now I don't have CNBC calling me and say, Dan, what's the rate today? Right? I could tell them exactly where rates are today. But so when the media reports that, it's always a little stale. So just this week, we had a really bad inflation report and interest rates went up 1/4 to 3/8 of a point in 1 day.
Wasn't it? It was the largest increase since.
Yeah, it was the whole
6 to 12 months.
It was a much higher expected number. So the market freaked out about it. So rates can go up again, 1/4 or 3/8 of a point in 1 day, right? We had people that locked in the day before as counseled them as, hey, there's a big report coming out tomorrow, just lock in, because we can always go lower. We can, it's called a float down. Everyone has a one-time float down between the day after they lock and up to 5 days before their closing date if rates move a quarter point or more.
Okay, let's discuss this because this is a big thing. This is a program through Guaranteed Rate. So not all lenders have access to it. Some may, but not all do. So you're saying, and you and I just had this conversation with my dad. My dad's under contract, and Dad was reading the newspaper and saying, I don't know if I want to. We had him lock in, which thankfully we did now because rates look much uglier than when he did last week, knowing that between now and 5 days before his closing, if those rates get more advantageous, there is a free adjustment down to that rate. So in theory, you're creating a ceiling of where the rate can't go above.
Yeah, and that's exactly how I describe it too. We're setting a ceiling and the floor can move, right? And when we have, and the way we work on my team is when we see a good day when rates are going to go lower, we actually go through all of our locked loans to see if anybody can benefit from it. And then we reach out, and it might be a quick text like, hey, Amanda, rates just dropped. We can do this today, right? If we do it once, we're done, but here's your opportunity. If you'd like to do it, just text me back. We'll start the process. So,
i.e. saying to somebody that they can buy the same house at the same price and it costs them less.
Correct. Absolutely. And
I'd like to be the person on your team that gets to send out those texts every day.
Right. I do. They send them to me and then I look like the hero. But as you can attest, we did that. I don't even know. I mean, probably a dozen times.
A lot of times.
In the last,
just this year.
Yeah, exactly.
Oh, for certain. And I just wanted to go back to, we talk about it a lot on this podcast, but you brought up the media again. And I always think, I had a client that worked in journalism behind the scenes with regards to their ad sales. And the media is very good at what they do, but the consumer tends to think that their job is a little bit different than what their job is. They need to be profitable. To be profitable, they need to have engagement. To have engagement, they have to invoke emotion. The media's job is to either get you very, very excited or very, very scared. Those are the emotions that make you click. It's called clickbait for a reason, and want to know more, right? So the story isn't always what the headline says.
Yeah, and if it was, we would advertise all of our rates with 1 or 2 points and make them look great. And then when people reach out, they're like, oh, by the way, it's going to cost you,
there's a tiny itty bitty disclosure down here.
Yeah.
So true. So true. Okay, let's get into kind of an ugly topic. The National Association of Realtors lawsuit, right? It's been all over the news. If you haven't heard about it, you're probably hiding under the rock. It's been something that we have tried to give as much attention to and discussion on as possible. Has there been any impact on your industry or anything that you're seeing or expecting different?
It's a good question. So number one, NAR's had this happen. We had this happen too. We had back in, it had to be like 08 or 09, somewhere after the financial crisis, or is that a couple years after the financial crisis? We were
the target
for a lot of the stuff that went bad, right? So they came after loan officers, how we were paid, how mortgage companies, charge consumers, things like that. So what it did was it invoked more disclosures, it invoked more, just openness about everything. And it really, discussions completely. And yes, it did, change the way my world works and from an income perspective, but it didn't change the fact that we still write a lot of loans. Right. We still close mortgages for people. In the NAR world, it's a learning experience, and we still don't know how it's going to impact our world yet because it is so new. Because there's, if we're going to include buyer side commission in our closing costs, like how that's going to work. But I know one thing, homes are going to get sold and people are still going to be taken care of by the best of the best. And that's the same in our world. When our rules changed, it eliminated a lot of the bottom feeders. And this NAR settlement was essentially the way I know it. It's brought up by people getting screwed over.
Yeah.
And the people who are at the top, like you and a lot of other people in this world who are at the top of their game, there is no screwing people over. It's full disclosure all the time. And that's just, it's going to allow your industry to serve consumers better because everybody's going to feel more comfortable and they're going to get a sense of what people actually do for them.
No, and I think that bringing to light and reminding us of what happened to the lending world and the mortgage world post the housing crisis, right? That your structure kind of collapsed, right? It was one of the worst.
We had no idea what was happening for a while.
One of the worst markets we went through, and that there was all of these new regulations, new pieces put into place to protect the consumers, to create transparency, to change the kind of what was happening behind the scenes. But it didn't change the way that you worked with people. Right. It didn't change, and I think that that's important to know, because now you kind of feel like, gosh, that was so long ago, I barely remember that as a blip in the radar. That's essentially a lot of what's happening on our side of the world now is saying, hey, we want to improve the systems, make them better for people. You're right. I have no concern about this, because we were doing all this stuff correctly before, and we're going to continue to doing it correctly after. But yeah, I'm sure that there's a lot of people that are a little nervous about things moving forward. If
you remember appraisals changed, right? There's a thing called the AIR, the Appraisal Independence Rule.
Yep.
Well, we used to be able to say, hey, Amanda, I have a deal at 123 Main Street. I need you to do the appraisal tomorrow. That's not how it works anymore.
Nope.
The process still works. It can be, we have a deal right now where people are confused because the appraisal wasn't moving as quickly as they hoped it to be. It's because I can't call anybody directly anymore. We have to place it, and, then someone orders it, blah, 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 right? But that changed too after the crisis, because there were a lot of bad apple appraisers out there, sure. Right? So this is just kind of buttoning up all sides, right? We saw title industry, had some changes too. So the fact that this is all happening is a good thing for the consumer, and how it all shakes out is just going to make everybody more stable.
Sure. No, I agree with you 100% on that. I see no real adversity in it. I think it's something that's just going to improve our industry and improve what we do and how we do it, and just hold everybody accountable, which I'm all for. Let's do it.
Yeah. And I will tell you that I have not had one agent that I work with call me freaking out about it.
Yeah.
Because it's not the people, that are worried about this.
Every industry has its bottom tier. And we've already said in the real estate industry, so much of the business is done by a small group of people. Those aren't the people that are worried, because these are the people that have been doing great business all along. Okay. So here's another great topic, and this is going to be the one that wraps us up for today. Throughout this time that we've navigated some really ugly interest rates, so much of the discussion comes back to, we're going to do this now, and then at some point in the next 12 to 24 months, the likelihood of you refinancing is very high. Now, as a consumer, what should they be thinking about, watching, doing as we navigate these times to figure out when is the most appropriate time? Because as we said before, there are certain people that are probably a percentage point higher when they locked in than we are now.
Yep.
How do people understand that and how to digest that?
It's a good question, because I get texts a lot from past clients. There are, for instance, first-time homebuyers who had credit challenges, who paid a higher interest rate than rates are at right now, but they're not a first-time homebuyer anymore. So the incentives to offset their credit score hit are totally gone. So I ran one for a client recently. The rate would actually be higher today for someone like that. When people are, kind of perusing.
So just to understand that, if somebody used a special program, it may be advantageous to ride the benefits of that program.
Yeah, for sure. Because, we have, if you have a sub 700 credit score on a first-time homebuyer program, you're getting the same rate as an 800 plus homebuyer, which is a great incentive for buying a house. It's amazing for the person at that time. But on a refi, you're back to sub 700 is how we view it that way. Right. The party is over. So when you're as a homeowner and someone who got a mortgage in 2023 or 2022, you're going to look online to see what rates are. Number one, you're only going to see, if you just do a quick look, those are purchase rates. Purchase rates are different than refi rates. They used to not be, but now they are. The world, it just changed yet again in our space for something. So you have to have a conversation with your mortgage person on, if I were to refi, what's my rate right now? If the rate makes sense, it's more of what the payment does too. Because if you were to ask my parents, if you were to ask your parents, when should I refi? Oh, a half a point, 1 point lower, right? That doesn't necessarily make, number one, it might not be achievable, but it's what happens to it, right? If you're going to save $200 a month, $300 a month, and the closing costs that you pay on the refi are eaten up or made up in the first 12 months of doing it, it makes sense, right?
Sure.
You're lowering your cost of living. So yes, the rate matters a lot, but also the end result. People might take out cash from their home to pay off debts, right? Okay. We can still roll student loans. If someone has a substantial equity position in their home, we can combine a first mortgage and student loans. Oh, right. And in this rate environment, it's not necessarily something that was popular, but if we go to lower rates and student loans are higher rates, right, you can combine a first, and it's not considered cash out refi at that point because it's a student loan, right?
Details.
And with credit card interest rates high, it might make sense to ditch a 5% first mortgage and combine, 20% credit card debt with a 5% first mortgage at a 7% new mortgage.
Sure.
So that's when you refi there, it's a much bigger thing than just a rate drop.
So what I'm hearing is if you're considering whether or not it's a good time, they should just call you.
Yes.
Or text you.
Always recommended, call or text.
Awesome. Right. Because that's the best way. And one of the reasons why I so adore you is that I know that you're one of those people that you're always available to everyone, right? It's not like the transaction's done, see you later, when it's the next time. And we run our businesses so similarly in that, is that once you're in, you're in.
Yep.
From that perspective. Anyways, Dan, it is always a pleasure. I appreciate you coming down. I appreciate all that you've shared with our wonderful people. Thank you.
Thank you.
Until next time, Chicago.